it just required, I don't know, about a month of intense work. As I was still doing Tesla work during that time as well, by the way. And I think it's really, Tesla has not skipped a beat on execution. The Tesla team is doing an incredible job across the board in execution. So it's really, can't say enough good things about the Tesla team and the progress that's being made in terms of fundamentals. With respect to, with respect to sort of global demand, I just do want to really emphasize, and I'm not trying to say that this is the only reason, but it is certainly the primary reason, is that when interest rates increase, the cost of a car increases along with it. So the radical interest rate changes that have occurred have increased the prices of all cars, actually new and used. You can see like what a bath Carvana and CarMax are taking. This will be true of anything bought with debt. So there's that's on the demand side. Is the interest rate changes by the Fed, and then everyone's basically forced to follow the Fed. So you've got Europe raising interest rates, even Japan raising interest rates. Now and in my view, I've said a bunch of this already on Twitter. In my view, we are already in deflation. And the Fed is just dealing with old data. So then if I'm correct that we're already in deflation, the real rate of return of T-bills is insanely high. It's arguably above the long-term rate of the S&P 500. It's arguably above 6% real rate of return on a T-bill right now. So so you got two things that you get a double whammy if you're selling a product that is bought almost entirely with debt, like a car, and you have the risk-free rate approaching or so potentially exceeding the risky rate of the S&P 500, and that's why you're seeing a lot of pretty smart fund managers out there shorting the S&P 500 and shorting the stock market.
From a monetary policy perspective, Elon, like I completely agree with you, right? Like from a macroeconomic perspective, that's why growth in tech stocks compress when interest rates are going up. But, taking that out of the equation, and I think most of us reasonable investors up here, understand that. And I found it funny when you made that comment to Ross the other day as well. But, taking that out of the equation, do you really feel, we've talked about the 50% growth rate, and I find that to be really an arbitrary number, whether it's 40 or 45.
Yeah.
Do you really think Tesla is going to sustain that growth rate in the next couple of years still?
Well, so I'm just laying out what I see as just this is my best guess at the future. It's not like I have like some incredible crystal ball that is an exact predictor of anything. So with all appropriate caveats, but the reality is, if we are in a recession, I think we are in a recession, and I think 2023 is going to be quite a serious recession. And it's going to be, in my opinion, comparable to 2009. I don't know if it's going to be a little worse or a little better, but I think it's in my view likely to be comparable. And that means demand for any kind of optional discretionary item, especially if it's a big ticket item, will be lower. And then with the Fed increasing rates, which is really, this is quite unusual. This is like when you're heading to a recession, you should be reducing the Fed rate, not increasing it. So that amplifies the difficulty. So now you have sort of structural demand, which is obviously going to be lower in a recession, and you amplified the effective cost of a car because they're almost all bought with debt. So now you get a double whammy, is what I'm saying. So then the obvious choice in that scenario is: do you want to grow unit volume, in which case you'll have to adjust prices downward, or do you want to grow at a lower rate or go steady? It's sort of a choice there. My inclination would be to still grow. As I mean, my bias would be to say like, okay, let's grow as fast as we can without putting the company at risk, which would mean, in that scenario, profits would be low to negative during a recession, provided the cash position is okay. I think that's still the right move long term, and the so because there's also something that Tesla possesses that other car companies do not, which is extremely fundamental. That is that the cars are upgradable to autonomy, and so and arguably an autonomous car is worth many times what a non-autonomous car is. So even if your margins are extremely low in selling the car, if the subsequent upgrade to it being autonomous is worth a lot. So, and that's something that no other car company can do. Is only Tesla can do that. So I think that so that if you say well, I stand by my prediction that long term, that Tesla will be the most valuable company in the world. I'm actually fairly confident that that will be what happens. What I cannot predict, because there are many things outside of my control, is what will be the valuation along the way there. So that is subject to the stock, subject to a lot of emotional elements on the stock market, subject to macroeconomic conditions. But if they're like long term, I would say Tesla's probably, in my best guess, most valuable company in the world in less than 5 years.